Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the final day of the trading week and it looks like we could snap the two-day gains. For the start, the GIFT Nifty is indicating a negative start for the Indian markets. And of course, if you look at the pre-open rates, that is also pointing out to a subdued start for our own markets. Well, the global backdrop is quite tepid. Despite the US President Donald Trump granting certain tariff exemptions to Mexico and Canada for a month. We saw yesterday that the US markets have ended lower overnight. Once again, the US Treasury yields are rising ahead of the jobs data, which is later expected tonight. If you look at the Asian markets, that have opened on a negative note too this morning, mirroring most of the lower trajectory that was given by the Wall Street. The plus, however, that continues to be the cooling oil prices, still below that $70 per barrel, and the pullback in the dollar index. So yes, plenty of cues to start off with, but let's see what the markets would ignore and what it would price in as we go ahead. To understand how you should be placed in a market like this, we will be having our market experts that will be joining us. So keep posting your stock related queries on our live feed and we will be taking them up shortly. Before we delve deeper into the show, let's quickly take a look at the top headlines this hour. The sell-off resumes on Wall Street. The NASDAQ tanks 2.5% and enters the correction territory, while the Dow loses over 400 points even as US President Donald Trump continues to issue tariff concessions. Asian markets have opened sharply lower following a very weak close on the Wall Street. The GIFT Nifty is also suggesting a red start for our own markets. Gold prices snap three-day gains as Treasury yields rise. Crude prices remain steady with Brent around $69 per barrel. A day after providing tariff concessions to automakers, US President temporarily exempts tariffs on a wide range of imports from Canada and Mexico until April 2. The exemptions will apply to goods compliant with the US-Canada-Mexico trade agreement. So yes, yesterday we saw that the bulls remained upbeat for the second straight day, and for the week also, if we see that Nifty is also up about more than 1.5%, 1.8% gains coming in for the Nifty. Yes, on the global front also we have outperformed majority of the global indices too. But at least for the last 2 days, we have seen good buying interest. And this is not just because of US considering tariff concessions, but also due to RBI step up on the liquidity measures. And of course, as I was talking about, the pullback in the dollar index and the oil prices, which has also provided a good tailwind to the Indian markets. Now, in 2 days, we saw investors add over 12 lakh crore rupees, and we saw that broader indices also participated in this cheer. Now, going ahead, as we go ahead in today's trading session, we will watch out if Nifty can extend the gains, and the resistance is around that 22,800 mark, which is its 20-day moving average. Coming to what will set the tone of the trade today, we have the Nifty put call ratio, which has once again risen to about 1.14 levels from 1.05 levels in the previous session. So again, a 1-month high for the Nifty put call ratio. Coming to the next to the F&O ban list, the stock that has been continued to retain, that is your Manappuram Finance, and no stocks have been removed from the F&O ban list at this point of time. The next is your fund flows data on your screen. FOIs continue to be net sellers. They have sold about 2,300 crore rupees in the cash markets yesterday, and DIIs continue to remain the helping hand in the Indian markets, and they have bought equities which is worth about 1,600 crore rupees in the cash markets. Now, if you look at the pre-open rates, that is also pointing out, initially it was pointing out to a subdued start, but right now we can see that the Sensex is flat in the green at this point of time. However, Nifty is still down, flat in the red. It's still above that 22,500, but we'll watch out whether or not we can sustain this level and how we can open in today's trade. But to navigate what your trading strategy should be and to answer your stock related queries, joining me on board is your technical expert Jatin Gedia of Mirae Asset Sharekhan. Jatin, good morning. So good to have you.
Yeah, good morning, everyone.
Jatin, let me start off. We are seeing a good set of gains for the 2 days. Do you expect more to come? And what are the levels that you're watching out for the Nifty as well as the Bank Nifty levels?
Yeah, so in the case of Nifty, I think after a fall of around 10 consecutive days, the Nifty is now sustaining at higher levels. On the last couple of trading sessions, what we have seen is that the Nifty has been holding on to the intraday gains or the positive gains. Yesterday there was the weekly expiry. However, despite the initial hiccup or the initial hour of volatility, the market pretty steadily traded with a positive bias. So, in terms of levels, what we believe is that 22,670 is the level on the upside that we are closely watching. So, that is a crucial Fibonacci retracement level, and above that 22,800. So, that is the area around which we are expecting the first set of resistance to kick in. So as of now, our view remains positive for target of 22,800 on the upside. On the downside, the crucial support is placed at 22,425 to 22,400. So just in case intraday we get a dip towards the support zone, then I think we should see one more leg of buying interest kicking in at that level. So I think intraday dip should be considered as a buying opportunity, and the trend remains, or our view remains positive for 22,800 on the upside. Now, see, Bank Nifty has been underperforming a tad bit in the last couple of trading sessions, majorly on the back of HDFC Bank and ICICI Bank not performing in this overall up move. SBI has been a standout. So PSU banks are looking positive. However, the heavyweights of the Bank Nifty have been witnessing subdued action. Uh, Axis Bank from the private bank has witnessed a breakout. So there is a mix in the Bank Nifty. Overall, we still believe that the Bank Nifty has potential to rise towards 49,300 on the upside, which coincides with the 40-day average. So we are expecting levels of 49,300 on the upside, and the support for the Bank Nifty is placed at 48,200. So these are the crucial levels for Bank Nifty.
Okay, all right. Jatin, also apart from Bank Nifty, we are seeing that Nifty IT index has also been, relatively underperforming all of the other sectors for this week. Do you expect more consolidation on the way, or how are you viewing on the charts?
In case of Nifty IT, we believe that Nifty IT has witnessed a reversal from the 37,000 level. However, we believe that there could be some amount of more positivity coming in. Before that, because of the overnight cues from NASDAQ, there can be a dip towards 37,800, 37,700. But I believe that there has been some kind of a trend reversal on the Nifty IT index. So we believe that this dip we get towards 37,800, 900 mark should be considered as a buying opportunity. On the upside, we believe that 39,000 should be our preferred or expected target on the upside. In terms of stocks, we believe that Emphasis has a good setup. Emphasis is looking positive. In the penultimate trading session, we saw bullish engulfing candlestick pattern on the daily charts, and yesterday we got a follow through buying interest. So from the IT pack, Emphasis is looking positive for 2500 to 2520 on the upside.
Okay, all right. Jatin, what about the Nifty Metal Index? Because that was a star performer yesterday too, and for the week also, the Metal Index has been outperforming the headline. 8% gains coming in so far this week. Do you expect the bullish uptrend to continue?
Yeah, so in the case of Nifty Metal Index, 8,600 is was the breakout level, which was or which we were anticipating to break out, and it happened along the expected lines. The fall in the dollar index is also helping the Nifty metal back and metal stocks as well. So there is a positive news flow. Along with that, the fall in the dollar index is helping the Nifty metal stocks, and I believe that this rally is likely to continue towards 9,200, 9,300 on the upside. So from current levels, still around 5 to 6 odd percent up move is possible in the Nifty metal index. And if I have to look at some stock specifics from the Nifty metal, then I believe that Jindal Steel, JSW, in fact, all the metal counters are looking positive. NMDC, National Aluminium, I think there is the whole sector as a whole is performing I think all the metal stocks are likely to do well over the next couple of weeks.
Okay, okay. Some metal stocks that you can watch out for then. Jatin, anything that investors should avoid right now, because we're seeing a bit of recovery, a bit of volatility too. I mean, 2 days of gains we saw, and then before that we saw 2 days of straight losses. But anything that investors should be a little cautious about at this point of time?
Yeah, around 22,800 there can be a resistance kicking in. We avoid at this point of time. Yes, there can be trading positions, but that have to be on the lighter side. Don't go aggressively on the long side. So this is the first reaction that the Nifty might be witnessing after a first initial pullback from the 22,000 odd level. I think we are not as of now in a comfortable position, but yes, there can be some selling pressure at higher levels around 20 to 800. So don't go aggressively longs. Yes, we should be looking at the positive side or the bullish side from a short term perspective. But yes, we'll also have to have some caution while positioning in the long side. So don't go aggressively long as of now. Wait for some dip and then again a breakout. So that is what the setup that we are anticipating as of now. That around 20 to 800 we might get a resistance. Thereafter get a correction and thereafter once again start a rally. So we'll have to wait and watch this cycle how it plays out.
Okay. Any terms of sectors that you're watching out keenly for too, Jatin?
Yeah, see, most of the sectors have done well in this pullback. We believe that the oil marketing companies are looking good. So, oil marketing like HPCL, BPCL, IOC are looking good. Even in case we get a dip, then these stocks should be considered on the buying radar. And some of the stocks like Pidilite is looking positive, so Pidilite can be considered. Tire space is looking positive. Apollo tires can be considered. So there are a whole host of stocks that we have on our radar. I think slowly and steadily as the market progresses, the setup should be more clear.
Okay. All right. Okay, all right. Let's see the first rates which is trickling in on our screen. Well, we have opened in the red, 22,500. However, we are holding up, but we have opened like with very minor cuts at this point of time. 0.1% cut coming in for the Nifty. Sensex is also down about 100 points on the screen, but right now, if you refresh, then it is down about 250 points at this point of time. So yes, we have opened in the negative territory after 2 days of great recovery that we saw. We are seeing a bit of red on the screen once again. But yes, majority of the declines coming in from the Bank Nifty index also, that is opened with about 0.2% cut. Nifty Auto Index also seeing a cut of about 0.3%. Nifty IT Index seeing profit booking at this point of time, 1% decline coming in from the IT Index too. Do note that the IT Index also underperformed the headline indices in the past couple of trading sessions. We were talking about the Nifty IT Index too, and today again, once again, it has opened in the red and with a cut of about larger cut of about 1% at this point of time. Nifty Metal Index, however, it's holding the majority of the losses limited. It has opened in the green and with nearly 0.5% gain coming in for the metal index. If you look at the broader end of the markets, Nifty Mid Cap in the red, Nifty Small Caps, however, outperforming the mid caps at this point of time with gains of about 0.1%, but flat in the green at this point of time. India Wix, however, that is opened slightly in the red, in the green. 0.5% gain coming in for the India Wix. If let's take a look at some of the Nifty gainers and losers at this point of time. Well, some of the steel stocks are doing well. We can see Tata Steel, JSW Steel gaining of about 0.4%. Reliance Industries once again doing well with a gain of about 0.2%. Do note that yesterday also we saw that it did contribute to nearly 1/3 of the Nifty's gain, and today also it is doing well. Coal India, Hindalco, some of the commodity plays. Yesterday also one of the top Nifty gainers. Today also the stocks seem to be doing well. And Axis Bank, one of the top gainers at this point of time, 0.5% gain coming in there. On the other hand, if you look at the different picture, the losing picture of the Nifty 50 losers list, we can see Tech Mahindra once again extending the losing streak to today. Nearly a percent cut coming in. HDFC Bank, Trent, ICICI Bank, some of the private lenders taking a knock at this point of time. Bharti Airtel seeing a cut of about 0.5%, NTPC nearly 1% at this point of time. But let's take one stock in focus, that is your Bharat Electronics. Let's see how the stock is doing at this point of time with a gain of about 2% in this weak market. Well, the company did bag additional orders which was worth about 550 crore rupees since February 20, and now it has taken the total order flow for the FY25 to about 13,000 crore rupees. Jatin, the stock is seeing 10% gains past 4-5 days, and even today the stock is opened with quite a good gains. Do you expect a good recovery on the charts?
Yes, in the case of Bharat Electronics, we are expecting levels of 295 to 300. So that was the previous swing high. And in terms of technical supports, I believe that 268 is a very crucial support zone. So that it coincides with the 40-day average, 269 to be precise. So just in case someone is going long at current levels, then 269 should be kept as a stop loss. And on the upside, 300, 295 to 300 is the expected level around which we are expecting this rally to continue. So yes, it's forming higher tops and higher bottoms on the daily chart. So the trend is positive. We are likely to witness continuation of this positive up move.
Okay, all right. Let's take some viewer queries that is dropping in on our live feed. Well, the first query coming in from Naveen is asking the view on BHAIL. Well, BHAIL is seeing a good gains. Past 4-5 days also, BHAIL is seeing a gain of about 11%. Today also the stock is doing well. Jatin, what is your view on the counter? Do you expect a good momentum going ahead?
Yeah, see, in the case of capital goods and in fact, BHEL is one counter that we are closely watching because on the weekly charts there has been a bullish development or a bullish candlestick pattern that is in formation. So I believe that yes, the short-term bottom might be in place for BHEL, and on the upside we are expecting levels of 222 to 225 where the first set of resistance kicks in, where the 20-week average is placed. So yes, there can be some amount of pullback, but however, we believe that in the stock 183 is a very strong support now for the stock. So in case someone is buying, then yes, we can go ahead and buy with a stop loss placed around 183 odd levels, and on the upside we are expecting 222 to 225 from a short term perspective.
Okay, 225, that will wash out for BHAIL. But another viewer query, that is your Naveen, once again is asking about Reddington. How are you viewing the stock, Jatin? Because it's a outperformer if you look at from the past 6 months. Do you expect the performance to extend?
Sorry, the stock name, please.
Reddington.
Reddington. Okay.
Yes, it's one of the outperformers if you look at from the past 6 months, and even the Q3 was quite good for the stock.
Yeah, yeah.
What is
So
your
on the charts, we can see that it has been pretty outperforming, and in fact, it is trading around the all-time high. So yes, there is an inherent strength in this stock. We believe that the recent pullback towards 234, 230 odd levels was bought into, and now the stock is heading towards 275 to 280 odd levels. So that's the upper end of the rising channel that we can draw on the charts. So 275, 280 levels are the expected target. One should keep a stop loss of 234 if someone is going long at current levels.
All right, okay. Let's move on to another viewer query. That is your Mukund Yadav is asking the views on Paras Defense, and he's asking whether he should hold or sell it off at this point of time. Jatin, if you look at this stock from July onwards last year, it has seen a significant correction, 40% downtick for the stock. But how do you expect the stock going ahead? Any reversal on the horizon?
Yeah, see, in the case of Paras Defense, one thing is that the mid and small cap space has seen the brunt of the selling pressure, and now it makes very little sense to sell off or liquidate your long positions at current levels. So I think the investor should hold on to this investment in Paras Defense. He should place a stop loss of 840 just in case things turn downward once again. Then 840 should be his stop loss level, On the upside, we are expecting levels of 1020, 1050. So that is the level around which he can consider. So from current levels, there is a decent upside of around 10 odd percent that we are expecting from a short term perspective. So I suggest to hold on Paras Defense from a short term perspective.
All right, hold on Paras defense at this point of time. But let's move on to another viewer query. Well, Satya is asking the views on Cyient and Signity Technologies, and he wishes to go long term on both of these counters. He's asking what is the level that we can enter in this market on both of these counters. Well, Jatin, both of these counters, if you look at 10 to 11% of downtick we saw past 1 month, how do you expect the stock to going ahead, and what are the levels you would suggest to enter?
See, in the case of science, first of all, the trend is well and truly negative, or the trend is on the downside. So, as of now, I would suggest not to enter this stock until and unless this stock crosses or sustains about 1380 on the upside. Until and unless then the trend does not reverse. So, science should be avoided. Even if someone wants to buy from a long-term perspective, I think he should wait and not consider this stock from an investment perspective.
Okay, all right. All right, let's move on to another viewer query. That is your Debuke is asking the views on Sterling Wilson and Premier Energy at this point of time. How does both of these counters look on the charts, Jatin? Because if you look for Sterling and Wilson, if you look at from the 6 months perspective, the stock has been nearly half at this point of time. Premier Energy is also the stock is not doing that well, but how do you expect them to do in the near term?
I'm not able to find the code for Sterling and Wilson. Another stock that is Premier Energy, right?
Yes, Premier Energy.
See, in the case of Premier Energies, yes, the stock has witnessed a pullback towards 940 odd levels. We are expecting this pullback to continue towards 1020 to 1030 odd levels. So, I think current levels can be considered for a fresh entry, and if someone is holding, then he should continue to hold with a stop loss of 885 on the downside. So, that's a crucial support level for the stock Premier Energies, and on the upside we are expecting levels of around 1020 to 1030. In case of fresh entries, as I suggested, 885 should be kept as a stop loss.
All right, 890 levels that we can watch out for Premier Energies. But one stock which is buzzing in trade today, that is your Kalpataru Projects, seeing a gain of about 6%. Well, the company has secured new orders, which is worth about 2,300 crore rupees in transmission and distribution business in overseas market and building projects in India. Now, with this, it has taken the total order intake in FY25 so far at around 22,500 crore rupees. Jatin, the stock has corrected nearly 30% this year. What's your take on the counter? Because today the stock is doing quite well.
Yeah, see, in the case of Kalpataru Projects, I believe 1060 is the expected level on the upside. On the downside, we are expect one should keep a stop loss of around 925. So yes, this stock has broken out of an falling channel, so that indicates a trend reversal on the daily charts. And on the upside, as I said, 1060, 1070 is the level around which we are expecting this rally to continue. So expect the positive momentum for next 2 to 3 trading sessions on the upside.
All right, 2 to 3 trading session on the upside. But let's look at Reliance Industries, because we have a couple of queries on the counter too. Today also the stock is doing well, and it has, it is doing well from the past 2 to 3 trading sessions, 5% uptick coming on the index heavyweight. But Jatin, what is your view on the counter? Because we saw 2 brokerage upgrades also coming in for the stock yesterday.
See, in the case of Reliance Industries, I think once the 1240 is the level that we are expecting, or from a short-term perspective, if that level is breached on the upside, then we can see a trend reversal on the daily charts, and then every dip can be considered as a buying opportunity. As of now, 1240 is the level that we are keenly watching. That is the breakout level for Reliance Industries. Overall, the stock has corrected significantly from the highs. So a bit oversold on the daily charts. And yes, this is a technical pullback that we are witnessing in the stock. However, the I think if the larger uptrend has to kick in, then some of the recent highs of 1240, 1270 needs to be taken out decisively for a larger uptrend to kick in. So as of now, we are closely watching on to some of these key heavyweights of the Nifty index. So if that is taken out, then we can, just conveniently go long in some of these stocks. So yes, these crucial resistances need to be taken out decisively over the next few trading sessions. So 1240 is the level that we are watching out for in the case of Reliance Industries.
Okay, 1240 level to watch out for Reliance Industries. Let's move on to another viewer query, that is your Ashish Prakash is asking the views on Federal Bank. Well, Federal Bank, Jatin, if you look at from November perspective, it was 200 levels. Right now, it is at 180 levels. The management also said that they plan to take the bank to about number in one of the top 5 lenders from the number 9 position in 3 years. How are you placed on the stock, and what does the near term indicate?
Yeah, see, in the case of Federal Bank, there has been a short-term trend reversal because on the daily charts we are witnessing a rise above the previous swing high. So that is a sign of trend reversal. On the upside, we are expecting levels of around 187 to 190 odd levels. So there is a crucial resistance kicking in at that level. So we are expecting this rally to continue towards 190 odd levels. So around 5 odd percent upside is possible from current levels. 178 should be kept as a stop loss if someone is entering or entering fresh longs at current levels. So overall, the trend is positive. There's a trend reversal on the daily charts.
All right. Let's move on to another view query. Ashish Prakash is also asking the views on Kess Corp. The stock is quite doing well on the in today's trading session. 5% uptick, Jatin. We saw the news flow also where the NCLT has approved the split into 3 listed firms for the Kess Corp demerger. How are you placed on the stock at this point of time?
Yeah, see, if I look at the weekly charts, then it's forming an engulfing bull and pretty strong price action on the weekly charts as well. So last 3 weeks, price action has been engulfed by this week's candle. So it's a pretty strong price action on the upside. 745 is the previous swing high. So we are expecting around 80 to 90 rupee upside even from current levels. So that's a decent upside of around 12 to 13 odd percent. If someone is going long at current levels, then 630 should be kept as a stop loss. So risk reward is pretty favorable for fresh entry even at current levels.
Okay, all right. But let's move on to another viewer query, that is your Shweta Naidu is asking on car trade tech and whether or not it is a good level to enter the stock at this point of time. Car trade tech still below its listing price, Jatin, but a good recovery that it saw in the past 6 months. How are you placed on the stock? Is it a good time to enter?
I think the stock is likely to consolidate within the range of 1320 to 1700 on the upside. There is a no real setup as of now that indicates that it's likely to start a fresh leg of up move. The overall structure is still positive. However, what we see is that a consolidation is likely between 1350 and 1750 from a short-term perspective. So, if the stock slips to around 1325, 1350 odd levels, then that are the levels around which then one can consider to go long in the case of car trade. So, the wait for a dip towards 1350 odd levels, and then we can consider going long in the trade.
Okay, all right. But let's move on to another view query. That is your Shweta Naidu is asking about KPI green. She's bought it at 414 levels. Should she hold or average at this point of time? KPI green 395 levels at this point of time. The whole of, if you look at December, then it was trading at about 500 levels, but we can see quite a dip in the month of January. But again, once again, it has started to recover. Where do you expect the stock to go, Jatin?
See, in the case of KPI Green, the trend is negative. So I think if any pullback towards 425 odd levels, then one should consider to exit this investment. At this point of time, the trend is negative, so fresh entry is definitely not suggested. But however, if someone is holding, then pullback towards 425 should be considered as an exit opportunity.
Okay, all right. Jatin, we did talk about Paris Defense, but we have another viewer query. Shubh is asking on whether or not we should buy Hindustan Aeronautics at the current price. Are you positive on the counter? What are you suggesting?
Yeah, see, in the case of HAL, what we are expecting is that a pullback towards 3,800 odd levels. On the weekly charts, it's forming an film bull candlestick pattern. So price pattern is looking positive, and we are expecting some kind of a pullback from oversold territory in some of these defense counters. So HAL being one of them, we are expecting the up move to continue, and yes, as of now, you should continue to hold. We are expecting levels of 3,800 in the stock.
Okay, all right. We have another viewer query, that is your Mamun Mondal is asking on the Gulf oil lubricant at this point of time. If you look at Gulf oil lubricant charts, past 1 month, relatively it has outperformed the markets. And how do you see the stock going ahead, Jatin? Gulf oil.
See, in the case of Gulf oil, there has been a 3 week consolidation breakout. So that's a pretty positive sign. The volume is also present. So price volume breakout can be seen on the charts. On the upside, we are expecting levels of around 1350 from a short-term perspective. 1180 should be kept as a stop loss for fresh long positions, and if someone is holding, then 1350 is the expected upside from a short-term perspective. So price volume breakout has occurred, so we are expecting the momentum to continue.
Okay, all right. Just one last question before we let you go, Jatin. Any top picks for the hour that you're watching out for?
Yeah, see, a couple of picks that we have on our radar is one is Titan. So Titan, we believe that since last couple of trading sessions, it has been holding on to a crucial support level of 350, 360 on the downside, and we are expecting a recovery in the case of Titan. So from the frontline price, we are recommending Titan from a short term perspective. On the upside, we are expecting levels of 3180 in the case of Titan. So 3060 should be kept as a stop loss, and 3180 is the expected target. Another stock which we like is Apollo Tires. So Apollo Tires witnessed a gap up opening in yesterday's trading session. However, we did see a consolidation post that. So again, now we are expecting the up move to continue in the case of Apollo Tires. So that can be considered on the long side. One should keep a stop loss of around 390, and on the upside, we are expecting levels of 425. So Apollo Tires and Titan are our preferred picks for today's trading session.
All right, Titan and Apollo Tires. But with that, we have to let you go, Jatin. Thank you so much for your time and answering our viewer queries so patiently. Hope we connect with you soon.
Thank you.
All right. Let's quickly take a check of the markets at this point of time. We are still in the red. Sensex is down about, flat in the red at this point of time, and Nifty also flat in the red. However, it is above and holding above that 22,500 mark. So that is what we need to watch out for, whether or not it sustains throughout the day, the hold of 22,500 mark. But what is doing well on from the sectoral perspective, that is your Nifty Auto Index, which is eking a gain of about 1% at this point of time. Bank Nifty, however, not doing well, 0.3% cut coming in. Nifty IT Index also not doing well at this point of time, 0.4% cut. But if you look at the broader end of the markets, well, that has recovered, and we can see both the mid caps and small caps outperforming the headline indices. So yes, the broader markets are trying to limit the downside on the overall markets at this point of time. But on that note, let's quickly get on board with the fundamental guest of the show. We have Daljeet Singh Kohli, Head Equity, Roha Asset Managers, joining us. Daljeet, good morning. Let me start off by asking, how are you seeing the current mood of the market? Do you believe the worst is behind us?
Good morning. It's difficult to say the worst is behind, but I think major part of the correction is probably over. That's what our understanding is, that probably this brutal correction of last 2 months that has taken care of most of the concerns which market had. The major concern with the market had was about the earnings part. I think to a large extent that has been addressed. Then about the valuation, again, there were a lot of pockets which were going out of whack. Many of them have come back to some sanity. Still, there are some pockets where valuations are not justified or they're quite high. But at least a large part of that has been taken care of. So I think we are quite close to the end, but maybe it's very difficult to say when exactly the bottom is made. But we are hoping that things will start improving from here onwards. Our base case assumption is that Q4 numbers will be better than Q3 numbers. And in any case, most of the operating days, second half heavy. So you will always see that H2 is always better than H1. So therefore, some of that earning recovery will come in. All this noise and sentiment hit because of global, whatever is happening, uncertainty. A large part of that will also be taken care of by that time. When in next month, by middle of next month, when we have result season starting. So the combined effect of good earnings and a little bit of subdued news flow on the uncertainty part might take care of things from here.
Okay. Daljeet, then what should be your trading, strategy for investors with respect to equities? Because you're saying that the worst of the bottom could be, over from here on. And how are you finding the valuations? Is it the right time to suggest investors that, to start accumulating at these levels?
Yes, exactly. In fact, we are doing that only in our portfolio. What we have done is we reviewed all of the companies that we are holding. And after the Q3 numbers, attended some management calls, did some more conversations with them to understand how Q4 will pan out. And good part is that in most of the cases, I think 99% of the cases, we didn't have to change our view. So that is the good part, that if you have selected a right stock, if you're and you have gotten at the right time, then you don't have to worry too much about the sentiment and too much about what is happening, noise which will be there around. So what you have to do in these kind of situations, that is the best thing that you do is review your holdings, look at them and see what is happening on the fundamental part. And if you are convinced that the numbers will come, there might be a few hiccups here and there, delays also. So if you think that those numbers are going to come, I think this is the time to accumulate all of that.
Okay. Daljeet, any pockets of value that you are seeing at this point of time? Any pockets of value? And of course, also suggest if there is any sectors that, investors should completely stay away from for the time being.
So stay away would be mainly all those things which are story based narratives. A lot of hope built in there, that on certain premises we will grow, on certain assumptions we'll grow at 50%, 30%. Those kind of things one has to avoid, because now more sanity will play in the market. So what if you see for last 2-3 months, what market has been doing? Market has been punishing very low growth and very high valuation. So if the companies are not showing that growth in the numbers, and the stock was trading at lofty valuation of 40, 50, 60, 80 times, those are the ones which have seen the big destruction. if there is a growth, but valuation is still high, even those have seen a correction. Places where there has been normalized growth and normalized valuation, they have not seen that kind of bad hitting. Collateral damages have happened, but still those are much lesser than the other ones. So what you have to keep in mind is where the valuation is in comfort zone, and that you have to do very stock specific. So we are a pure bottoms up company. We look at only, instead of going by the broad picture and broad theme or something, we look at each company threadbare and see what kind of valuations are there. Just to give you a flavor, our portfolio even now at this time also has a aggregate PE of around 20 times. So when the whole world is talking about 40, 50, 60 times, we are holding companies, 25, 30 companies, which are totally giving us 20 times P multiple. So one can find out out of a group of 4,000 companies, 5,000 companies. You can look at this. Now, just to give a flavor, what kind of companies we are holding. So we have a very diversified portfolio. Some of them are like from chemicals, some from pharma, agrochemicals, and pharma is one where we are looking at good opportunities there. Some consumption based, both ends of consumption, high-end consumption. We are owning some car company and some rural consumption related things. So small appliances kind of companies are there.
Okay. All right. With that, we have to let you go, Daljeet. But thank you so much for your time, and we hope that we connect with you soon.
Thank you.
All right. Let's take a quick check of the markets at this point of time. Well, Sensex and Nifty continue to remain in the downward trajectories, and the sell-off is deepened a bit. Sensex is down about 200 points. Nifty is also slipped below that 22,500 mark. If you look at the sectoral indices, some of the indices that have slipped into the red, that is your Bank Nifty index, Nifty FMCG index seeing a cut of about 0.2%, Nifty IT index more than 0.5% cut coming in, Nifty Pharma index also not doing well with about 0.2% cut. However, what is holding well for the market, that is your Nifty Auto index that we were talking about, Nifty Media index, Nifty Metal index also doing well, Nifty Realty index also however doing well. If you look at the broader end of the market, small caps and mid caps, both of them outperforming, but small caps more, larger gains coming in from the small caps end of the small cap index, nearly 1% gain coming in from the small cap index. But with that, we have come to an end of this edition of the Opening Bell. We have the MC Global Wealth Summit, which will be starting in just a few minutes from here on. We have a star range of panelists from Samir Arora to Morgan Housel and a different range of panelists. So don't forget to tune into that. And also don't forget to tune into 3:30 p.m. for Closing Bell. We will be discussing about how the market is developed and what the stocks are in focus. Until then, signing off.